Our next speaker is Mr. Rakesh Pujara. Can I have Mr. Rakesh Pujara on the stage? So Rakesh ji, as we call him, is 18 plus years experience with Naman Securities before his current role, where he is the founder of Compounding Wealth Advisors, which is basically a firm which is into, he does asset management, money management for himself and few people, or he's about to get the license and the stuff into picture. Now what he does is at Naman, he has handled one of the largest systematic trading based algo desks, perhaps in India. And we kind of look up to him each time we talk to him, we learn a lot of new things, and we love the conversations. They start at, I don't know if we start at 4 p.m., then they have to kick us out of the office usually because we don't stop. So Rakesh is going to talk about everything that we have seen till now, everything over the 2 days which we have gone through. If this session is something you don't get, then it's all going to be meaningless. Everything is meaningless. So this is it. Rakesh Pujara.
Thanks, Vivek. Am I audible? Am I audible to everybody? Yeah. Thanks, Vivek, for the kind introduction. He's already introduced me. So, I'm in the market since last 25 years. I've traded almost all the facets of market, be it intraday, maybe it is futures, maybe options, maybe it is commodity as suggested by Umesh Bhai. I do trade currency on and off. At Naman Securities, 19 years, like I had an opportunity to recruit in and around 200 traders and mentor them, train them at some point, motivate them, and try and understand when they make money, when they lose money, how they make money, how they lose money, and what are the factors that goes into making money actually. Is it the skill, is it the strategy, or is it the combination of everything? So this being a very interesting topic, what I realized is more important than anything, either strategy or maybe money management and anything else, I found that psychological makeup of a trader had a very, very great influence on how his trading performance was. Whether he's calm and collected, whether he's a little greedy, he's a little fearful, that has a long bearing on his performance day in, day out. Who survived in the long run, who did not survive. So I could observe them from the very close quarters, and this subject being very interesting, I did some research on that, and hence this presentation. I'm sure after this presentation, you will find that you'll be able to improve your trading performance, and if it helps you, I'll be more than happy. So why should we study trading psychology? Why should we study? Like, what is the need? Like, let's see what Warren Buffett says. He says investing is about the study of human nature. So far we were knowing investing about knowing fundamentals, technicals, this, that, maybe strategy and all that. Now the research person in this field says it is investing about human nature. Jesse Livermore is one of the greatest trader of our previous times. What has happened in the past will happen again and again and again. This is because human nature does not change, and it is human emotions solidly built into human nature that always gets in the way of human intelligence. Of this I am sure. So basically, all the buyers and sellers in the market, this expresses their opinion via trades, and that trades are basically results of their emotions, whether it is hope, whether it is greed, whether it is fear, and that decides the prices, and these prices ultimately results into some sort of patterns, and that patterns are tradable and tradable profitably. So why should we study psychology? Because successful trading is a journey. So when we start a journey, like many youngsters, I saw a couple of guys, 26-year-old guy like Sankal, for example. When we start as a youngsters, we feel that success is going to be like this, 45 degree. That is what we think, but when we actually travel along, we find it is much more complex. It's much more complex than what we believe. Successful trading is a journey, it's not a destination first, and journey is not all that 45-degree linear line. It is a complex line. If somebody gets a 45-degree, they should count them as one-off or maybe outlier. Most of us will agree that we have encountered this kind of a success rate at some point in our life. And ultimately, to come out of this complex kind of a success line, we need a definite psychological makeup, a strong mental mindset to come out of this. Otherwise, you'll get lost in the journey.
Just quickly, one small announcement. Dhananjay is here. So, a group for Pune is waiting for you outside if you have to leave. Yeah, thanks. Thank you. We'll see you next year.
Second need, why should we study psychology? Because this field is very fast-paced and challenging. Every day there are new things coming. 5 years back when I started trading algorithms, like I was like, oh, I'm different than other people and I'm early in the race, and probably by now, and after 5 years, I've learned the rules of the games and everything. Then suddenly some Rishabh Shah comes and he says, machine learning is outperforming your algo. So suddenly I find myself outdated because algo is just performing compared to buy and hold, but machine learning is outperforming all my algos. So the next level that I need to go is machine learning. So only constant is change. So when you need to change so frequently in any field, your mental makeup has to be really, really strong. Algorithms and machine learning artificial intelligence have taken over the world, and that is why we need to be very, very mentally fit. Let's see some of the statistics. Some research has been done on like what it takes to be a trader, successful trader. Anyone can be trader, but what it takes to be a successful trader. Some of the statistics after the survey and research is saying upwards of 80% traders are losing money. So I'm sure the rest 20% are sitting here, and they will be making more money after today's session. Another statistic says only 1% trader achieve long-term profitability. Like somebody can have a profitable streak for a short while and then probably goes into a losing streak. But to achieve a long-term profitability, it's only 1% of the people that achieve long-term profitability. Among new traders, 40% last 1 month. 40% of the traders last only 1 month, and only 7% remain active after 5 years. So it's very exciting to enter this world, but this kind of statistics has to be kept in mind. Only 7% remain active after 5 years. The foray can be very expensive depending on the capital one invests. It's not only about losing your financial capital, it's about losing your mental capital as well. Like it's like you feel like a loser once you leave a field, you feel like a loser. With this kind of statistical odds, still we are in this field, so our preparation has to be different than what others are doing, what other 80% are doing, maybe what other 99% are doing, or maybe other 60% are doing, or maybe 93% are doing. If our preparation is different than them, probably we have a chance to stand. So it's basically a game of human nature. It's a game of emotions. And the predominant emotions that goes with trading is fear and greed. So what this slide says, in this slides, fear tells greed, hey, I didn't know you were coming in today. Greed says, why don't you take day off? I will take day off tomorrow. So basically, the point I'm trying to make is, market is constantly oscillating between greed and fear. Some of the channels, like to my mind, Times Now or some Economic Times or some channel has launched an index called Fear and Greed Index. So market is constantly oscillating between greed and fear, and these emotions constantly exhibit itself in trades in the market, and that trades emanate some patterns, and you can trade these patterns. Because of all these emotions and all these hopes and greed and everything, what traders are faced with is pitfalls. All these emotions, because of these emotions, we fall into the trap of all trading pitfalls. Some of the commonly trading pitfalls that traders fall into are mentioned here. First is overtrading. Overtrading basically can be attributed to greed. Once you are greedy about making money, you tend to overtrade. And once you overtrade, you tend to ignore your rules and your trading plan and everything, and you start trading just in a hope of making more money. Since you're overtrading, you are actually taking more risk than you're supposed to take in your trading plan. Suppose your trading plan provides for 1% risk, you start taking 5% risk, 10% risk, suddenly your quantity size increases, suddenly your frequency of trading increases. Suppose you are trading on a time frame of 1 hour and your execution starts happening in 5 minutes. Another trading pitfall can be inability to define profit and loss. So basically, why are we here in this business? We are in this business because we want to make profits. And if we want to make profits, before we enter the trade, we should be able to define our profit and loss in no uncertain terms before we enter the trade. But since greed and hope and fear takes over, we are not able to define clearly profit and loss. The next one is acting on tips and advice. It's very much possible that tips is kind of it's a sinister design by some operator or maybe some informed circle or something. It's possible that advice is already circulated amongst people and you are the last one to receive the advice. So it's very dangerous to act on tips and advice, but since people are in a hurry to make money, people want to be millionaire very fast, they fall prey to all these trading pitfalls.
Rakeshji, have you seen overtrading as mostly with most other traders you have dealt with in so many years? Is that a problem or rather most of the traders exhibit behavior of overtrading?
Yes, tips is very, very common thing. Like all of us at some point fall prey to it, including myself. Even after so many years of consistent rule-based trading, still you fall prey to kind of information like my friend has told me the results are going to be great. Growth आने वाला है या product announce होने वाला है या takeover announce. The classic case in point is Fortis, recent trading in Fortis. Like everybody has some information or other on Fortis, whether and somebody is going to take over in this. Now even after announcement of takeover by this Manipal group, the stock is still oscillating around 150. The stock is oscillating between 190 and 130 since last 1 year at least.
Yeah. I also wanted to ask you on overtrading. Like, is that with most of the traders, they do overtrading? Have you seen?
See, it's a very natural instinct. See, after all, we are all humans. We are not machines. No matter how much I program you not to overtrade, you do the trade provided by your systems. For example, your system gives 5 trades. You do only 5 trades. But human nature is such, because, see, you are not in control of your emotions all the time. So, the moment you run out of control of your emotions, either you are greedy or maybe fearful. If you are greedy, then you buy not 1 lot, you buy 3 lots. Maybe you will buy 4 lots, and all the money management techniques goes into haywire. Suddenly, suppose you have a streak of making profits, continuous profits since a week, for example. The next week, your hand is going to be free for trading because you have more money to lose now, and you start overtrading. And it's very natural, but only thing, if you're aware about all these trading pitfalls, probably you can reduce the frequency of happening this. Maybe you can reduce the intensity of overtrading. It's not possible, I'm telling you with all my knowledge, it's not possible to remove all trading pitfalls 100%. But if you can minimize that, if you can reduce by 70%, 60%, maybe 80%, your trading result will definitely improve. This is a very common trading pitfall, trying to be right. You know, मैंने तो बोला था आज निफ्टी एक्सपायरी इतना ही होगा या बैंक इतना होगा या मैंने तो बोला था डाउ जोन्स कल 500 पॉइंट ऊपर जाने वाला है. मतलब दिस इज वेरी वेरी कॉमन. मोस्ट ट्रेडर्स suffer from the trading pitfall. They are in the business of being right. Instead, they should be in the business of being profitable. So if your focus is of profit and not being right, the best trade I make personally is the trades where I've gone wrong in my opinion. Why I make money even if I'm wrong in my opinion? Because I have a trading system in place. So my opinion is wrong. Suppose I am bullish and I'm expecting the price to go above 200-day moving average, for example. But the price does not go above 200 moving average. Instead, it goes below 200. So probably I'm short. So trading your wrong biases through systems makes profit. This is a very dangerous thing, and many of us are constantly in this trap of being right. Like in most of our private conversation, we always, as a trader, we talk, मैंने तो बोला था कि निफ्टी 12,000 हो जाएगा, मैंने बोला था 8,000 हो जाएगा, somebody says मैंने बोला था 9,000 हो जाएगा, लेकिन how much money you have made? If your prediction comes right, you should make money. But even if your prediction goes wrong, either you should lose very little, or you should even make money even if your prediction is wrong. As an algo trader, we are in the business of following either trend or maybe mean reversion or maybe market neutral strategy or whatever your strategy is. Your opinion does not matter. Market does not count for your opinion at all. Other trading pitfalls are making decisions under the influence of biases. As a human, we suffer from a lot of biases. There can be a separate session on this, but I've just enlisted a few of the biases that we suffer from. Overconfidence bias, like the moment you make profit, suddenly you become overconfident, as Sankalp mentioned yesterday, for example, in Fire Chat. Confirmation bias, once you have a knowledge that some company is going to be taken over by some other company, you will look for all the informations on takeover of that company. So basically, you're trying to confirm your already formed opinion. You already have a formed opinion on Fortis, and you are looking to confirm that through various news. Even if it is somebody denies that I'm not taking over, you will say maybe somebody else will take over. That is how you want to confirm your biases. When you make profit, suddenly you have an illusion that you control the market, but you can never control the market. Herding bias is again going by hearsay. So all these trading pitfalls, because of emotions, you become trading pitfalls, and these trading pitfalls ultimately results into what is called as profit gaps. So what is a profit gap? Profit gaps, a term defined by Mark Douglas as the difference or gap between the potential profit you could achieve if you had just followed your trading method and what your actual bottom line results are. So everybody here has experienced profit gaps. Anybody who is having 100% profit as their system. So anybody here, can anybody raise the hand? Who has experienced profit gaps? Who has experienced? So what about people who are not raising hands? Are they not trading? Shubham, are you trading? Have you experienced? Have you experienced? Half into some, so you try and plug that, right? So even if it's like they might be a little lazy in raising their hand, but I'm sure everybody faces profit gaps. Why these gaps? Why these gaps exist? Generally, our algorithm gives a equity curve like this, but when we actually trade that algorithm live, our equity curve something like this. Do you agree, Vivek? Sovit? No, not exactly. It's not as bad as that, but there are lot many variations. One of the examples that I want to give is like how profit gaps happen. It's a live example. I have traded this market. This is a slide of Nifty futures, maybe Nifty cash, not futures. This is a moving average line, simple moving average line. The big green candle that we see here is a candle of 9th of December 2016. 9th of November 2016. So everybody remembers that date because 8th of evening, 8 o'clock, Mr. Modi demonetized 500 and 1,000 rupees notes. So our simple strategy was stay long above the line and go short below the line. That was simple strategy. Suppose you are following. This is a daily chart. 8th November 2016, you are going long into the market. And around evening, 8 o'clock, Mr. Modi comes on the television, he demonetizes the currency. So suddenly there are goosebumps and you are feeling nervous about it because the markets are already showing, SGX Nifty is showing down. Incidentally, the same day, the next morning, 9th, there was an election results of Mr. Donald Trump winning the election. So two events back-to-back happened that could have caused disruption in the market because SGX Nifty was showing 300, 400, 500 points down. Dow Jones was, because Trump was winning, like the whole atmosphere was like market may hit a lower circuit because Dow Jones was showing around 900 points down. I'm sure everybody has experienced this. Early in the morning, 7:30, 8 o'clock, you call a meeting in the office and say, what do? We are already long in the market. And there are two events that has happened. Demonetization happened and probably Trump is winning and that's not good for the market. We had been fed by the media. It's not good for the market. Ultimately, market rallied after that. But anybody who was following news were like colored with that prejudices that it is not good for the market. So we decided, let's review. For example, this was not done live, but most of us will revise our strategy. And what we'll try and do is like try and get out the position as soon as possible, early in the morning. That is what we'll try to do. So we modify the strategy that on that day. We had not modified, but most of us will modify the strategy on that. Then probably we'll decide that we move to the 30-minute candle. Like the moment market opens, we get rid of at least our long positions. And then if possible, go short, because then you might not get the opportunity to trade the market. Market might hit a lower circuit or something like that. So this is a half an hour candle. That red line is that 8404 level of moving averages on a daily basis. The next candle was a half an hour candle of 9th morning, where market opened down with a gap, it went below and then it covered a bit. So if you had traded this market, for example, if you had traded as per your strategy, you would have lost around 115 points on that day, because market closed on 8th of November was 8543 and 9th November closing was 8432, and still you were long in the market. So probably you would have encountered a loss of 111 points, around 1.3%, and that was very much bearable. But early in the morning, it looked like an unbearable thing, and you shorted the Nifty. Just because out of your fear, कि भाई market में तो उल्टा circuit लग सकता है and अपना बहुत पैसा लग सकता है, you shorted the market in first half an hour. See what happens after. The market covers and it goes above your moving average line in around 1 o'clock, quarter to two, this line goes up, and then you have to go again on the long side, and actually that day you end up being long in the market. So buying just because out of fear you modified your strategy, you end up losing around 353 points instead of 111 points. So there was an extra slippage of around 2.83%. This extra slippage of 2.83% is just purely because of your emotions. It is not provided for in your strategy. This is how the profit gaps will be created. When you trade the market live with your strategy, profit gaps will keep on happening like this, and it just happens because of your emotions. When it comes to trading and investing, we are rarely aware of the hurdles actually lay ahead and how to deal with them psychologically. So why this trading gap happens? Anybody? It's just because of us. Does anybody ask us to modify our strategy? No. Does anybody suggest anything? No. But just because we are fearful. So we are the only cause for these profit gaps. And why these profit gaps is super common? Because as a trading fraternity, we constantly ignore some of the boring areas, like need to know the human behavior, need to know the human psychology, need to be patient, need to be disciplined. These are some of the subjects that are very vital, but as a trading fraternity, we are guilty of ignoring these subjects and not spending enough time. Something like what Soviet did yesterday as a exercise, for example, Vipassana, or maybe Tratak, or maybe some Zen walking. These are a part of a trader's life. And not many of us are paying adequate attention to this, and that is why these profit gaps will keep on happening. So far, we have found that trading field is not all that easy. Statistical odds are not with us. But should we be depressed with this? Not at all. Why should we depress? Why not we be in that 20% strata, or maybe that 1% strata? So if we want to be then 1% strata, we want to be successful, there is a clear-cut road to be followed. Any trader who enters this profession, typically it is a new trader's cycle. Newbie always looks for such seminars. Come here, look for some holy grails, code the strategy and start it. Then the second phase comes, he loses some money, makes some money, and then realizes the only strategy is not good enough. Probably enters some management techniques, money management techniques, like how much should be the position size, and this is very vital, but that is not the final one, that is more important. After trading for some time, he will soon realize that the psychological aspect of trading is more important than the first two. First two are required, but without the third one, they are incomplete. So it takes a while for somebody to realize this. So, how many of you are engineers here? Engineers, any engineers? Okay, any doctor? Doctor? So there is no doctor here. There is some chartered accountants? Okay, quite a few chartered accountants. So can I ask anybody of you, like you're a chartered accountant, like can you share how many years of studies you've done to become a chartered accountant? So CA is allowed only after 12th? 10 plus 2 plus 4? Can you be CA from day one? No, you have to go for 10 years of at least that schooling, 2 years of maybe college. So maybe, yeah, then maybe more. So around, 16, 17 years. So did you go get your first job at 1 crore package? No, right? So to reach there, you'll have to spend some time in the industry, do some internship or do whatever. Maybe if you're practicing, then you'll have to source your clients, and it will take 2, 3, 4 years. So around 20, 23 years to get a settled career. Agree, everybody? But when it comes to trading, suddenly we want to be super trader the next day. Monday morning, I'm sure somebody will go and plot that volatility bust and try and trade Bank Nifty on Thursday and make money. I'm very sure somebody will go, do some research, and Wednesday evening they are ready to with that 2 lakh capital, and that 5 lagne wala hai volatility bust pe. So the point I'm trying to make is, like, when it comes to trading, our expectations are misplaced. We are not doing enough to be successful, and then we regret, ये हो गया, वो हो गया, मुझे ये तकलीफ हो गया, ये ट्रेड में मेरा पैसा गया, वहाँ से मिस इन्फॉर्मेशन आया. तो we have all the excuses in the world. So if we correct our expectation about what is required as a work, just to demonstrate that, I'm going to play a slide that will show the importance of deliberate practice and training.
No, Mr. Han, I told you. I get it, okay? Be respectful. I got it. I put my jacket on 1,000 times. I took it off 1,000 times, okay? This is stupid. I'm done. They can beat me up if they want to. And you know why you only have one student? Because you don't know Kung Fu.
Xiao Zhui,
What?
come here. Check it on.
Mr. Han, I already...
Check it on. Check it on.
I don't have a jacket.
Check it on. Be strong. Check it on. Firm. Check it off. Remember, always strong. Check it off. Strong. Left foot back. Right feet back. Left feet back. Pick up his jacket.
Oh, Mr.
Focus.
Okay.
Always concentrate. Left back. Right foot back. Pick up his jacket. Stay. Pick up his jacket. Strong. Hanging up. Hanging up. Hang up. Anything. Strike. Hang up and attitude. Harder. Harder. Good. But no face. Check out! Kung Fu lives in everything we do, Xiao Zhui. It lives in how we put on the jacket, how we take off the jacket. And lives in how we treat people. Everything is Kung Fu.
So, in the video you see the boys practicing just putting on the jacket, putting off the jacket, but that ultimately helps him in doing the live fight with his kind of an opponent. So in the market, if we don't do deliberate practice, we don't spend enough hours doing practice, and we expect to make money, I think it's a folly. Let's say what Bruce Lee says. Bruce Lee says, I fear not the man who has practiced 10,000 kick once, but I fear the man who has practiced one kick 10,000 times. So somebody who practices one kick 10,000 times is more dangerous. Let's see what Charlie Munger says. Charlie Munger says, more important than the will to win is the will to prepare. How many of us are willing to prepare for what it requires to be a successful trader? That will decide. That will decide. I can see one hand going up. So are you the only one, or there are some few more? Who is willing to prepare? Unless you are willing to prepare, I'm telling you, this weekend seminar will help you, but soon the enthusiasm will fizzle out in next 2, 3, 4 days. By next Monday, you will forget all the techniques, all the volatility burst, all the maybe option strategies, and you'll be back to what you're doing. So this brings me to an important research that was done. There is something called 10,000 hour rule. Has anybody heard of this 10,000 hour rule? So few of them, yes. The question was that what it takes to become a master in any field, whether it is chess, whether it is cricket, football, or maybe some other form of art, music, or something like that. It takes around, the research says it takes around 10,000 hours of practice, constant practice, after which somebody starts to excel in that field. So even if you work for say 7, 8, 10 hours a day, probably 250 days, so it's around 2,500 hours, at least 4 to 5 years in front of screen, off the screen, reading, training, and all this will accumulate to 10,000 hours. But when it comes to trading, suddenly we want to be a successful trader after a weekend seminar, or maybe after reading a book, or maybe after going through some YouTube video for half an hour, and suddenly we want to be like a super ninja trader, you know. The road to successful trading is like when you model successful people, you'll be able to shorten your length of kind of training or whatever it takes to be a successful trader. So when you actually model successful people, when you talk to them, when you become disciple to them, you will basically shorten your journey. So there were several interviews done by Jack Schwager with some successful trader worldwide, few dozen of them, and there are some startling and some common conclusions made out of those traders. After the chats with the trader, he has come out with a list of people, successful people, what they follow. What they follow as traders, and that has made them successful. These are the common traits that are found with successful traders. Successful traders know that they have an edge. So all of you know what is an edge? Like for example, in the example of Subhadip Nandi, like he was mentioning several trades, 20 trades, maybe 12 are profitable, maybe 8 are not. When you maybe risk to reward ratio is 3, so when you multiply, so that gives you an edge. So unless you have an edge, you will not be able to make any profit. So they know the trading is about odds and not certainty. Like ye to ho hi jayega. Definitive languages are to be prohibited by using. Like traders should not use definitive language. ये हो ही जाएगा, ऐसा ही होगा, ऐसा कभी, I don't think we should use such language, because market is all about probabilities. No matter how certain you are of some event occurring or not occurring, ultimately it's a probability. Even if your probability are in your favor for example, 99.9%, still you have a chance of 0.10%. So that is where your risk management technique will come in play. All the successful traders have a long-term orientations. Successful traders never think in terms of next trade or maybe next 2-3 trades, maybe next 5 trades. They always think in terms of next 1,000 trades. I had read in some book where that some trader had put some play cards in his office, just mentioning this, the next 1,000 trades. So when the moment you read that label of next 1,000 trades, the current trade or the next trade or the previous trade becomes irrelevant. Pool of profit is always created by few hundreds or maybe few dozens or maybe few thousand trades, not by couple of trades. So don't expect to make and go and killing couple of trades. They always have a long-term orientation. They trade without expectations. So when you say don't have expectation, it's very human to keep expectations. But when you practice something called meditation, for example, that was taught to us by Hiral and Soviet, then you practice the art of being detached. What you need to do is when there is a trade in your system, you put up the trade. Whether that trade will be profitable or not profitable, that nobody knows. So you basically don't get attached to the outcome, whether it is a loss or a profit. What is your duty as a trader is to put up the next trade, irrespective of the outcome. All the successful traders, they don't know whether the next trade is a winner. This is all accepted by all the successful traders. They don't know. Like as people sitting there and some people sitting here on the dais, for example, they believe people sitting on the dais knows everything. ऐसा नहीं होता है. Everybody is uncertain of the next trade. Like next trade profitable hai, or next trade loss making hai, nobody knows. And this is all confessed by successful traders. All the successful traders have the rules and they follow them without hesitation. So everybody has first of all made rules, and the second most important part, they follow their own rules. Like many of us detect patterns on the chart, but how many have the courage to trade the chart? So unless you trade the chart, it has no meaning. You detect a pattern, iska ye target ho sakta hai, ultimately that target comes. But suppose somebody asks in sugar, like, आप sugar में थे क्या? अभी आपने पूछा. Sugar का मैंने आपको, for example, उमेश भाई ने chart दिखाया, और समझो प्रॉफिटेबल है, उसमें ट्रेंड फॉलोइंग सिस्टम लग सकता है, लेकिन वो अगर मैं करूँ ही नहीं, मुझे मालूम है शुगर में ट्रेड करने से पैसा आएगा, सिंपल मूविंग एवरेज लगा तो भी पैसा है, लेकिन अगर मैं खाली देखता ही रहूँ और मैं करूँ ही नहीं, आई डोंट हैव द करेज एंड कन्विक्शन, तो कोई फायदा ही नहीं है. Apart from rules, they follow them without hesitation. They have methods, but most important thing is that they have mental fitness to trade the system, and they don't have profit gaps. So as a trader, what is our endeavor today should be to reduce the profit gaps. To reduce profit gaps, we must develop the mental fitness. And to develop mental fitness, there are certain things to be done. Like for example, knowledge of behavioral aspect, some exercises, some meditation, something of that sort. Everybody has a trading plan. So nobody trading, without a trading plan is very, because there are limitless possibilities, like Shubham was mentioning some billion plus possibilities of some strategy. So unless you have some trading plan in mind, you will not be able to trade anything at all, because there are, Height says in this connection, he says, if you bet big, you will definitely win big, but if you run out of chips, you can't bet. So basically, the whole game is of survival. If you survive, you will thrive. So important aspect is you should have a money management things in place. They cut the losers and let the winners run. Most of us do the reverse. We cut the winners and let the losers run. Why do we do this? Because there's something psychological reason behind this. Why do this? Anybody knows that? Why, sir, any input on this? Why we do that?
Fear acts faster than greed.
Greed? Fear?
Fear acts faster than greed.
Fear acts faster than greed. Anybody else? Why do we do that? Why do we cut winners fast and let the losers run?
Because we don't want to get disappointed once we have run up and everything are coming down.
So you don't want to get disappointed, you don't want to give up on your profits. Lack of conviction. Anybody else? Anybody wants to contribute? Devang bhai, anything on this? We hate losing, then we like winning. So why do we do this? Why do we not let winners run? And why do we let losers run? Any reasons for that?
So it's because of our emotions that we don't, because we have lost in future, in past,
Okay.
we don't want that to happen again.
Anything, anything from you, Vivek?
I think there's a lot of behavioral study around this that we basically become risk taking
Okay.
in adversity when you're losing
Right.
behavioral studies, and in kind of when we should reduce risk and when we are making money,
Okay.
I mean,
To be-
we should let the trade run. We kind of cut.
Yes? Yes, give the mic to him, please. The gentleman is behind. We can digest profit but not losses. That is what gentleman says.
Actually, we tend to associate with the prior experience. That is the reason this all things is happening.
Okay. You tend to associate with the prior experience. So with the mic to that gentleman there.
As we rightly mentioned, sometimes it's ego as well. If we are booking our losses, it is going to hurt our ego, and if we are booking
Yes.
our profits, it is going to boost our ego.
So many of us have given this response. You want to talk about it, Umesh bhai?
We were doing a research on a batch of 50 traders, women traders and 50 male traders. So one example was there. If there is a sale, short is available at, dress is available at 50% discount, women will run faster. But in stock market, male do reverse. If stocks are down by 50%, if they're down, they will run and sell. So irrationality is what...
So again, the greed and fear. But there is one solid psychological reason behind it. There is something called, do you want to talk about it, Kiran sir? Can the mic go to him, please?
See, we want to defer pain and we want to take the pleasure early, like.
Yes, so that is what is called instant gratification. So psychologically it is called instant gratification. Basically when we take a trade and you are in profit, basically you want to tell the world I made profit, okay? So you don't want to wait for 6 months or a year, maybe 2 years or 3 years to tell your friend that I made a profit. So this psychological need of instant gratification makes you take these winners fast, and since you don't want to tell the world, you want to delay the gratification in case of a loss. You don't want to tell your wife today that I made a loss, so you will hold on to the position and probably you will hope it can come back and probably I'll make profit after. And then this psychological tendency makes you hold for the losers for a very, very long period of time. So if we are aware about this tendency, probably we can correct it. The tendency is called instant gratification. They are aware of the behavioral biases and avoid them constantly. So all the successful traders have shared this because they are all aware of behavioral biases. Like instant gratification is one of the behavioral bias, and they try and avoid them consistently. Yes. Okay, can the mic go there, please?
This instant gratification could be avoided to some term by using trailing stop losses.
See, the concept is psychological and you need to deal it psychologically. See, you already have rules in place, like one of the rules is let the winners run and cut the losers. That's one of the rules, very commonly used rule by all successful traders. But how you are going to follow it? As shown in the previous slide, you practice it, okay? When you practice, when you are encountered with a winner, let it run. That is how you will develop, because habits are such things, once they are formed, where they are very difficult to break. But when they are forming, you are not realizing they are forming actually. So even winning is a habit. Letting run the winner is also a habit. You have to make a habit of it and try and, as introvert as possible, try and talk less about your successes, try and talk more about your losses maybe. Like I make it a point when I make a loss, I go and tell the world, yaar, isme paisa lag gaya. It is not necessary to tell the world when you made money. So this kind of manipulating techniques with your mind, you go and tell the world that I made a loss today. So that will not delay that instant gratification, right? You don't tell the world that I made profits today, that's fine. So you are basically delaying the gratification. So when to delay the gratification, when not to delay, that is something that can be done with deliberate practice. It will not come overnight. So let's see what Marcus says. So basically we have to study our own personality and play to our strength. If somebody is a bowler and he starts opening the batting, probably the team will not do well. So in a team, everybody knows the strength and weakness. So as a trader, we are supposed to know what kind of a personality we are, and what kind of strength we have, whether we are a holder of a winner or whether we are cutting of a loser or something like that, or what kind of a, whether short-term trader, we are a long-term trader, or we are a scalping trader or whatever. So let's see what Michael Marcus says. He says every trader has strength and weakness. Some are good holders of winners but may hold their losers a bit too long. Others may cut their winners a little short but are quick to take losses. As long as you stick to your own style, this is important, you must stick to your own style. Like everybody has their own style, you should not try and imitate other people's style. You get the good and bad in your own approach. So you can, like for example, this Tharp trader test has got some test to evaluate your personality. He'll, based on the question asked, he will give you the analysis what kind of a trader you are. So probably there are a lot many online surveys available like this where you can actually identify what kind of a trader you are. Undergo proper training and gather domain knowledge. See, undergoing of proper trading, see in case of trading profession, there is lack of widespread infrastructure available for training. But if you want to be in this profession, it is your duty to find such occasions and such institutions where you get training, and books are always available with the internet, all the videos are available. So it's your duty to gather the domain knowledge and collect the required training. Let's see what Charlie Munger says. Charlie Munger says, in my whole life, I have known no wise people over a broad subject matter area who didn't read all the times, zero. You would be amazed at how much Warren reads and at how much I read. My children laugh at me. They think I'm a book with a couple of legs sticking around. So, he says I'm a book with a couple of legs sticking out. That much they read. So in the next slide I'm going to play is like importance of reading. Let's see what successful people do. Lights. So as emphasized earlier, like any other profession, trading also requires to undergo proper training and continuous update. As shown in the slide, knowledge always wins, and as Charlie Munger says, all wise men read a lot. The next one, have a multidisciplinary approach. There is something called Lollapalooza. What is Lollapalooza? Lollapalooza is something outstanding of its kind. As personified by Charlie Munger, the critical mass obtained via a combination of concentration, curiosity, perseverance and self-criticism applied through a prism of multidisciplinary mental model. Mr. Charlie Munger advocates multidisciplinary approach to life. He says you must know the big ideas in big disciplines and use them routinely, all of them, not just a few. Most people are trained in one model, for example, economics, and try to solve all the problems from that perspective only. So it is like a man with a hammer, everything looks like a nail. When only tool you have is hammer, and all the problems wherever you encounter, you will try and solve with hammer. So what he's trying to say is, you should have a multidisciplinary approach. You should have a knowledge of, apart from economics, suppose you are the major in economics or major in maths or major in psychology, you should have knowledge of other subjects as well, for example, psychology, history, or maybe geography, maybe statistics, maybe technology and all that. So what it helps is doing is when you solve a problem and that problem is kind of solved from multidisciplinary point of view, that problem will be solved very, very quickly. Like Charlie Munger is known to be a 30-second man. Whenever something is offered to him is a problem, he is known to give answer yes or no within 30 seconds. And it is found that even the domain experts, after so many hours of research on that project, will come out with the same conclusion as Charlie Munger has found within 30 seconds. So it is possible just because of the multidisciplinary approach. Being in the marketplace, for example, knowledge of history. Since we have a knowledge of history, probably we could debate today about Bitcoin, whether it's a bubble or not, right? Since we have a knowledge of tulip mania, since we have a knowledge of South Sea bubble. So if you do not have a knowledge of history, something like this happens, probably you will not be able to know. So it's important to have a multidisciplinary approach, apart from your having your domain knowledge. And that will create something called Lollapalooza, something outstanding of its kind. And you should develop a comprehensive trading plan. Failing to plan is planning to fail. As emphasized, also everybody should have their own trading plan. You should ask this question to yourself: what is your system in? Whether it is short-term in nature, whether you are going to write readers for a long term or something like that. Define the appropriate market environment, like what kind of a market you want. You want a low volatility market, you want a high volatility market, whether you want a trending market, whether you want a trading market. Then you define your low risk setup. What is your low risk setup? Whether there is a breakout is a low risk for you, maybe retracement is a low risk for you, maybe support or resistance is a low risk for you. Define your risk per trade, how much you're going to risk. Like even if you have some capital, you can't risk all of them in one trade. So you have to have a clear rule about risk per trade. Some people follow 1%, some people follow 2% rule per trade. Define how to deploy your risk. So all of your risk need not be deployed at once. Probably you can slice it to for 1/3 you can deploy now, and then probably when the price is in your favor, you can deploy another 1/3, and it's further in your favor, another 1/3. Something like that you should create. You should clearly define your trade management criteria. When are you going to book your profit, and how are you going to manage the trade? Like Subhadeep's strategy said, 50% book kar lo, double ho gaya to. Then 3 guna ho gaya to baki ka bhi book kar lo. So that should be clearly defined. Define your exit criteria also. What are the conditions under which you exit the trade? Then there has to be performance monitoring. ऐसा नहीं कि हो गया और दिन खत्म हो गया, घर पे जाके सो गए, वापस दूसरे दिन आया, ट्रेड किया, वापस घर पे जाके सो गए. ऐसा नहीं होता है. You have to keep a record, and you have to do the performance monitoring. And wherever there are loopholes in your system or you need to correct, you should constantly evaluate the system for improvement. If you have everything in place, but suppose you don't have this, probably you are in trouble. Develop a positive belief system. Unless your belief system are aligned with your expectations, desired result is not likely to come. Napoleon, he says, what a mind of a man can conceive and believe, it can achieve. So if you're constantly fearful about losses, you're constantly visualizing losses, probably you will end up being in loss. Just to emphasize the importance of positive belief system, I'm going to play a video now that will help you understand the importance.
What are you afraid of? And do you agree with that comment that you attract what you fear?
You attract, not just what you fear, you attract what you feel, what you are, what you attract. What's on your mind, yes.
It's like the law of physics. I don't know how anybody can disagree with that. It's just, ask any physicist, they'll tell you that it's true.
David Mamet wrote a line in the play Edmund, every fear hides a wish, which I think is close to that.
I still am very insecure in so many ways, but I wish I could give that gift to all my fans. You have the freedom to pull that superstar out of yourself that you were born to be. We are all born superstars.
When things are going good and you visualize these good things happening, you visualize more good things happening, that's easy. What's not easy to do is when things are going bad and you're visualizing the good stuff.
Champion Conor McGregor. Conor, you've been dreaming about this moment. You've been talking about this moment. Honestly, though, does it feel the way you thought it would?
Yeah, it does. It feels beautiful. I dreamt this so much, so clearly, so precisely, and so frequently that it has manifested itself into reality. And that's what I am feeling right now. It's a dream come true.
I would visualize things coming to me that I wanted or whatever.
This was in like 1987, 85.
Yeah.
And
I had nothing at that time, so it was like, but it just made me feel better. It made me, at that time, all it really was for me was kind of making me feel better. I would drive home and think, well, I do have these things. They're out there. I just don't have a hold of them yet, but they're out there.
Okay. So didn't you write yourself a check? I heard that you did. Is that true?
I wrote myself a check for $10 million for acting services rendered, and I gave myself 5 years, or 3 years maybe, and I dated it Thanksgiving 1995, and I put it in my wallet, and I kept it there, and it deteriorated and stuff, but then just before Thanksgiving 1995, I found out that I was going to make $10 million on, I think it was Dumb and Dumber.
Dumb and Dumber, yeah. So you visualize yourself like... Visualization works if you work hard.
Yeah. Well, yeah, that's the thing. You can't just visualize and then, go eat a sandwich.
Like, you just decide what it's going to be, who you're going to be, how you're going to do it. Just decide. And then from that point, the universe is going to get out your way. It's like it's water. It wants to move and go around stuff, So for me, I want to represent possibilities. I want to represent the idea that you really can make what you want.
There are many ways to get the things that we want for ourselves in our lives. But basically, it all begins with how we choose to think. As you think, so shall you be. 7 little words that I think are perhaps the most important things that we can learn and master in our lives. This old proverb notion that I become what I think about all day long. And once you know that what you think about is what expands, you start getting real careful about what you think about. You don't allow your thoughts to be on anything that you don't want or that you wouldn't want to have manifest or show up for you in your life.
Like attracts like. You have to understand, you are a magnet. Whatever you are, that's what you draw to you. If you're negative, you're going to draw negativity. You're positive, you draw positive. You're a kind person, more people are kind to you. So you're like a magnet, and you got to understand something about like attracts like. If you see it in your mind, you can hold it in your hand. This is so true. Joy and depression cannot reside in the same space. Laugh every chance you get. Just bust out laughing, even if it ain't funny. Just laugh.
So you become what you constantly think. That is what the theme is. So it's important, even after doing so much hard work, so much gathering of so much knowledge, still we are not finding success. Somewhere down the line, there is something wrong with our belief system, and we need to work on that. If your belief systems are not aligned to what you are doing, probably you will find it more difficult to achieve. So it's better to check on our belief system. It's important to check every single thought we are inputting in our mind. And it's very important to be really, really positive about what you are doing. And it's very important that you believe that you are going to be successful. The next one, I did meditation and exercise. So you have done it enough yesterday, so I'm not going to talk much about it, but it's very, very important. Ray Dalio, as mentioned by Vivek yesterday, he attributes all his success, major part of his success, to meditation. So once you meditate, your mind is very calm and collected, and basically your decision-making power improves. And everybody knows the importance of exercise, but let me emphasize that once you do some exercise, it releases certain chemicals in your body. And those chemicals are required to neutralize the negative chemicals that are constantly produced in our body through active trading. So when you do the active trading, there's constant flow of chemicals within the body which are very harmful to your health. And just to neutralize that, you should exercise and meditate. The next one is patience. After doing all this, you need to be patient and wait for the success to be in your fold. What is patience? Patience is the art of waiting without tiring. So while you are waiting, you should not be tiring. So success is basically, patience is basically the art of waiting without tiring. So I'm going to play a video, just a 2-minute video that will emphasize the importance of being patient. So, yeah.
Wait. Your time will come. And when it does, give it everything you've got. Because if you're going to punch above your weight, it better be a knockout punch.
As seen in the video, Bruce Lee basically waited till the moment he was ready for a knockout kick. One kick produced the desired result. So it's important that in marketplace, we wait for the right opportunity and not jump to the market without presence of some good opportunities. And this kind of approach can actually increase your chance of success. The next in the line is most important one, that is discipline. Let's see what Charlie Munger says. He says, it takes character to sit there with all the cash and do nothing. I didn't get to where I am by going after mediocre opportunities. Basically, this gentleman who is swinging the bat is a gentleman called Ted Williams. He's a baseball player, and his strike rate is .400, which is very supposed to be very good in baseball parlance. In Science of Hitting, he explains that he divided the zone of striking into 77 cells, and whenever there was a pitch which was not there in a strong area, he should leave the pitch. Whenever there is a fat pitch which is slow, right in the middle, and in the sweet spot, he used to swing very hard. So with this kind of an approach, when there is a fat pitch, slow pitch, right in the middle, you swing it very hard, otherwise you let it go, even with the risk of striking out. So apart from doing a lot of trade, leaving a lot of trade is also important. So when you leave certain trades which are not very high probability trade, you will increase your chances of success. You should always wait for the right pitch to happen and then you swing the bat very hard. It's very important that we remain objective during our entire process of trading. Let's say what Charlie Munger says. He says, if you don't get elementary probability into your repertoire, you go through a long life like a one-legged man in an ass-kicking contest. So he's saying if you do not have probability in your mind, you are like a one-legged man in an ass-kicking race. Basically, you are disabled. You can't compete in that race at all. Last one, but not the least, it's very important to read. Apart from domain knowledge and training, you should read some motivational and self-help books. Some of the books that I recommend people reading is Awaken the Giant Within by Tony Robbins, Secret by Rhonda Byrne, The Power of Your Subconscious Mind by Dr. Joseph Murphy, and Think and Grow Rich by Napoleon Hill. This pretty much ends my presentation. I'm more than happy to answer some of your questions very quickly. Thank you. So anybody has a question?
Ask him anything. Ask him anything, literally.
Probably you can ask me anything.
It's 25 years, all included.
No questions?
Or he has floored you already, enough.
Maybe
like that one knockout punch.
Maybe I've answered your all questions.
All right.
So should we wind up, Vivek, if there are no questions?
Yeah.
Sure.
I think it's actually been an honor and a privilege. So we hope that you keep continuing to, provide and share your experience, because single most factor for new people is how to minimize maybe the mistakes that they potentially can make on. Yes. And when experienced people share that, youngsters have an opportunity, or newbies, to not repeat the same mistakes which others have done. So I think you have been extremely, almost like a teacher, guru for a lot of us and a lot of people. Please continue to do that.
Thanks a lot. And apart from teaching you all, probably I've learned a lot. Because while making presentations, I found a lot of things which probably even I was falling prey to all these limitations. So the reason I come here and talk is to actually, I'm a very selfish guy and I'm clearing my own doubts about myself. So I'm not here to teach you probably. I'm here to understand myself, like what it takes to be a successful trader. And thank you very much
That
for
is
your
so
kind
brutally honest and so very true. Thank you. Thank you again. Thank you, sir. Thank you. Thank you. So I think we'll break for kind of snacks and quickly come back and then wind up. 15-20 minutes, yeah?
Sorry.
Exactly 10 minutes you can get your plates, 10-15 minutes, and we have a small announcement to make and we wind up. Look forward to doing this every year, annually. We would love to, have you there, build this on this. Once again, thank all our sponsors for making this possible. All the sponsors, thank you. Babuda, MCX, Reliable Fox Trader, Master Trust. We really appreciate all the support you have done and we look forward to associating with you all in the future. Thank you.